That was quite the drop at 9 a.m. What's in store for the markets today? What's going on, everyone? Jeremy Hritz here. Courage pays better than fear trading. And welcome to another episode of Driven. What does my mug say? 'Tis the season to be jolly. Ho, ho, ho. I'll drink to that. And this morning at 9 a.m., the futures were pumping. We're up about 20 points. The S&P futures, Bitcoin was pumping. And then 9 a.m. came and boom, we saw a drop. And we are about 10 minutes until market open. Heading over to my buddy's house. We are going to work on some projects together, so I'll be trading over there. I've got all my pre-market setups done so that whenever I sit down, I could jump right into the markets. But we did see some weakness come in. And why is that? Well, we got the ADP employment change that came in, and it was negative significantly. So it's showing more signs of weakness in the labor market. And that's going to raise questions of, is the Federal Reserve too late to cut interest rates? And that data point more than likely seals the deal for a rate cut in December. I expect those odds. I'll check later the CME Fed Watch tool. I expect those odds to eclipse 90% after that information. But we also got information that Microsoft has cut some of their sales forecast, and that's applying some weakness. So two negative catalysts, two negative pieces of news that are injecting some volatility and some red into the markets here this morning on December 3rd. And so we just want to watch and see how we open here, what the initial response is. Are we going to get follow through? Are we going to get more selling? Is the selling going to increase? But also, as I've been saying here for the last few weeks, keep an eye on Bitcoin and the crypto space, because that is the best indicator of a risk on environment. And if all those gains that they acquired yesterday and even this morning until today broke over that 20 EMA on the daily chart, if they start folding and dropping and giving that back, then that's not good for equities. So let's see how this unfolds. Let's see how this plays out. The year-end rally potential is still there, but we have to be cognizant and aware that there are some leaks here in this economy that can impact the markets, one of those being labor. And the primary argument too hasn't changed. We are still near all-time highs. That doesn't mean that we cannot make a new all-time high before the year is over, because I still believe that we do that. I believe that we are going to tap 7,000, maybe a little bit over that. I don't know when that's going to come, but I would think that that's going to hit before the end of the year. And as I've been talking, once we get into early 2026, I think you can bank on a correction, 15 to 20% correction. I think that that's on the table. There's just too many unavoidable, unignorable pieces of evidence that tell us that that's going to happen. But the time, I don't believe, is here just yet. But we want to be ready for that. And the other thing that I believe will come into play in 2026 is going to be a mini bear market. And again, I'll have that all in my 2026 preview coming the last week of December. But it's interesting that we are getting some red in the markets here today. Who knows what is happening while I'm speaking. And I can't wait to see how this all unfolds. And the big catalyst, as I talked about too for quite some time here, is next Wednesday, the Jerome Powell presser. The rate cut is, I know Powell said in September, I think, or maybe October, that a rate cut in December isn't a foregone conclusion. It's a foregone conclusion now. It's cemented. They're cutting rates. It's happening. But the question is, what is the outlook for 2026? Are there more rate cuts being priced in? Is this weak economic data going to give more likelihood to increased rate cuts? Probably. And also remember, Trump is going to name Powell's successor. I thought that would happen before the end of December, but he said yesterday in a press conference that will happen sometime early in January. He is going to select someone who is dovish, who is willing to cut rates and whose agenda is going to be cut rates. So that is going to be a tailwind for the markets. That's going to provide more liquidity. And it's going to be interesting to see how it all plays out. I will say, and I've been thinking about this for a while, right now with everything that is happening, with just the markets where they are, and there's still room left to run, yes. But this administration, this presidency loves a charging hard, super high stock market. So there's tons of liquidity being injected into this. But look forward down the road and think of what year would that be. So 24, 25, 26, 27. So is that 2028? The next presidential election. If this administration is done and if there's a change of party in office, then we could see something pretty significant in terms of a massive bear market. So I know that's years away, but just put that on your radar. We'll revisit that here in 3 years. But all things are inevitable. But that's all I got for you today. It's time to go get trading. Make it a great day. Honor the moment. And as always, be grateful. Don't forget New Year's Wealth Accelerator course, January 5th. The registration link is live. I'll actually put it in the description. And join me. I want to see you there. Guys, love you. Thank you for supporting the channel.